Today, shipping is a critical part of the global transport infrastructure, which moves 90% of the goods around the globe.
Typically, if there are just too many ships built, the charter rates go down and then there will be less ship built, and this will form the cycle. So it's all about the cycle, either from the demand or supply or both sides.
Shipping is in a bear market since 2007, and the average stock is down about 95%. Clearly, in such an industry, not many winners are left. Shipping was a story of overhype, over-leverage and overbuild. But at the current point, we believe there is a trigger which will change this oversupply in the industry and make it attractive again.
Often believes it's a good time to invest in shipping because the distress that largely stems from pre-2008 period has now started to reverse. We have both very little traditional source of capital moving into the shipping industry, and also we've had a significant rationalization of the shipyard industry over the past 5 years or so, which sets the industry up for recovery from the supply side.
The critical factor that changes the backdrop for the shipping industry is the IMO 2020 regulation, which in our opinion flips the industry from an oversupply to an undersupply situation.
IMO 2020 is an issue for the shipping industry, which is hitting the mainline press, which we find is very interesting. First of all, Tufton is very positive generally on regulation in shipping, be it financial regulation or environmental regulation. It helps the industry improve its overall international image, and in general, it leads to fewer, more rational players investing in the industry. So IMO 2020 specifically though, what's most positive about it is that fuel costs will increase for the vast majority of the world fleet. We estimate about 80% of it. When fuel costs increase, ships have to slow down because their optimal operational speed reduces. Ships slowing down, more of a supply side correction, very good for the industry.
On top of that, shipping prices are currently near a 10-year low, and the shipping new order book is at a 20-year low. In 2007, there were 550 shipyards globally. This number has come down to around 50 now. As you can see, we are extremely bullish on shipping. But portfolio management is not only about finding the best trade, but finding solutions to benefit from this structural tailwind. Initially, when we entered the shipping market, we did that through an asset play.
We do sort of a barbell strategy, so we have some very low risk investment where basically there is no leverage involved. It's basically a yielding strategy where we buy ships and charter them out over a couple of years. And then on the other side of the spectrum, there is the private equity investments in shipping companies, where there is a clear catalyst and an entry point and an investment horizon of 3 to 4 years. And clearly there we want to double, triple the money. So we generally look at very different type of investment. So it could be a listed equity, could be a structured product, could be an SPV, or it could be a bond. So we look at the whole spectrum actually.